Joseph here from Eightcap. Welcome to today's update. So we are back looking at oil. So I haven't really changed too much actually on the trading view crude chart. So we can see I just really extended this resistance line from when we last did the video a week ago roughly. Kept this support point in play. This trend line added this fast trend line. So for me, really, this is the key area. We've had a fail once again there, well, really 3 times. So if we can see this there, there's 3 fails there. And we've had a decline yesterday. At the moment, price is a little bit firmer. Moving averages are supporting further buying. We have a trend in play. The real problem is this level. We just can't get through it. And while that level remains in play, you can't really look for a continuation higher. And obviously, this was in a downtrend when it first formed, but then we've had our first rally up, which failed, a new rally up, which has failed multiple times on multiple tests. And now we're really just wondering now, are we going to see a move back to test and break through the moving averages as we've seen before? Could that even take us back to this trend line here? Or are we going to see price continue to hold on to this fast trend and make another attempt at this point and break through? So this is in no way or any shape or form trading advice, but what we could look to do is if we had a break of this resistance with a breakout, and then we had a bit of a pullback to test the breakout, we could look to purchase there and see if we get a continuation and a higher high to break the previous high, push higher. If that did occur, you would have 2 points where you could start to purchase. One would be at the around the test when it is testing the breakout, and then the break of the high. In terms of risk reward, the earlier you get in, obviously, the better it is, and you really have to work out your personal risk and how that what that suits to your account size, and that percentage needs to be worked out based on what you can personally afford to put on the line per trade. But without going really too far into that, what you are looking to do then is if we do see a fail today, and we're pushed lower, we're looking for price to break this low. If we did see a breakthrough this low, then we would look to take maybe a short position, see if sellers are going to test this trend line or even further down through the trend line and maybe get a bigger move going that we have seen previously here and here, and that could take us back to test this trend line. So that's really the two plays we are watching at the moment with oil. So since we had that fail once again at this resistance point, slightly leaning more towards the short side, but we do need to see price really break this low. Then there's still no guarantee it is going to move lower. We could see a break at a low, a quick move down, and a pullback. So if you are trading that low break short, you have to be very probably manage your risk a bit, and then watch it a little bit and be ready to maybe to reevaluate your position if we did see a false low and a real big pullback into a doji type bar with a big wick down the bottom. That could be warning you that there's still plenty of demand in this area here, and we may see price try to make a new move higher. If we do see continued fails there are short plays there as well. But as just described before, if we do see a new move, if this move continues to rally and we see a close up here and a new breakout, you could look to wait for a pullback and then look to buy into the market to see if we get a new extension higher. But if we didn't make a higher high above the breakout high, that would be a worry. And then, if we did dip below resistance again, that would be a worry. So again, any discussion about buying and selling or position ideas, that's not trading advice at all. You really need to have a risk management plan in place, and it needs to be quite detailed. It needs to be tailor-made and to your account. And normally it works on a percentage between 1 and 5% of your account per trade, depending on your risk tolerance personally as a trader. A lot of people do feel more comfortable risking 1% of their account per trade. It's quite a universal figure, but again, you have to really work that out yourself and just make sure that you aren't betting too much of your account per trade, because at the end of the day, if you do lose your account, then you are unable to trade and make back any bad run that you have been involved in. So it's really important that you manage risk. So just to reiterate that it wasn't really trading advice. You have to personally take it all on board yourself and just make sure that what you are risking is what you're comfortable with, and that does fall, strictly into your risk management plan. But yeah, just a couple thoughts there about potential areas we could look to jump in short or long, just depending on what we see next. So that's really it for today's update. If you are happy to hear more about potential ideas and where to get in and out, leave me a comment. We don't do it too often, so I'm just curious if that's something you do want to hear more of. So anyway, again, it's just here 5 minutes, so thank you very much. Have a fantastic day. All the best for your trading, and let's see what happens next with oil, if we can see a break at that low or a break of resistance finally. So thanks again, and bye for now.